Sal, the housing market, are we seeing the same collapse in demand? Describe for us what's going on in the housing market, construction housing market.
Well, Canada's housing market is cooling pretty rapidly. It's had a nice run, 6 years of 10% price appreciation each year, much faster than incomes grew. So obviously people were building up their mortgages. Housing markets in some major cities ran up the most, Vancouver, Calgary, Edmonton, and those prices are falling now, and sales are down 20-25% from the record highs of last year. What's happening now is two things. Number one, there was the affordability issue. First-time buyers simply got priced out of the market by early this year because prices had run too much ahead of incomes. More recently, though, I think there's a lot of fear, given what's happening in the global economy, that people fear they're going to lose their job, so they're pulling back and they're waiting. And now that they're seeing prices fall, they're actually anticipating further price decline, so they're waiting. They're staying on the sidelines, and that's just contributing to aggravating the downturn in Canada's housing market. So our sense is we'll probably see sales and house prices in Canada fall further, at least over the next 6 months, as the economy contracts a little bit. So it'll be a pretty tough ride for some homeowners. Now, Canadian households in much better shape than U.S. households. We can talk about that later. So we're not expecting, by any extent, a U.S.-style housing bust. But suffice to say that our housing market will continue to cool. Prices will continue to fall, especially in the major cities, over the next 6 months to a year.
So let's continue on with that theme, housing. Tell us about some of the trends that we've seen up till now, and what the kind of, how we're deviating from those trends and what we can expect sort of going forward in the housing market, the construction housing market. That's
in Canada's housing market?
In Canada in particular. This is very important to our members.
We don't think the market got as overvalued as in some countries, but nonetheless, there was quite a wave, which created a lot of construction activity. If you look at the share of residential construction of the economy, record high recently. Same thing for the employment share of residential construction, which means that over the next 6 months or so, as the housing market cools down, you will see much fewer housing starts, layoffs in the construction industry as well. So our market will continue to cool. And with it, and because now people are fearful of losing their jobs, you will see a continued pullback in house sales in Canada, and prices will continue to fall. We think house prices could fall about 5 or 10% further in Canada. They're down about 6% on a nationwide basis in the past year, much more in some of the major cities like Toronto and Vancouver. But I would think prices nationwide could fall another 5 to 10%, and in some of the big centers, especially Vancouver now, we could see another 10 to 15% pullback in house prices. In particular, the condo market, there's going to be a steady stream of condos coming onto the market, especially in the big cities, Vancouver, Toronto, over the next couple of years. A lot of these condos were purchased by investors hoping to rent them out. So unless we see a big increase in immigration levels from 200,000 now, no, that overhang will persist and will be a drag on the market. What saves us is the fact that borrowing and lending standards generally more conservative in the U.S., in Canada, than in most other countries. So I think even if prices continue to fall, most Canadians, because they generally pay down their mortgage, unlike Americans, are sitting on a huge equity cushion. We'll take a huge decline in house prices, maybe on the order of 25-30%, before a lot of Canadians get flipped upside down on their mortgage, where the value of the house is worth less than their mortgage, and they're tempted to walk away. That's very unlikely to happen in Canada.
In the U.S., I heard that the 1 in 10 mortgages is in default or in foreclosure. What's the rate here? What's the default rate?
It's still very low. I would think, I don't have the actual number, but it's certainly not even close to the 1 in 10 U.S. mortgages that are either foreclosed in the U.S. or at serious risk of foreclosure.
In the 2 to 3% range.
Yeah, that sounds about right.
2 to 3%? So,
yeah.
So we're looking at a decline in prices of 5 to 10%. When are we looking at a recovery in the real estate market? Is it going to move in tandem with the financial markets, or it's going to take much longer to recover?
Well, we think Canada's economy will go through a recession, a mild recession through the first half of next year. So until we see the wave of job losses ending and jobs being created again, perhaps in the second half of next year, I don't think the housing market will stabilize in Canada. And we know there's a lot of persistence, inertia in housing markets. They're like elephants. Once they move in one direction, they continue to move for a while. So I don't think we would see a recovery in housing markets for the next 1 to 2 years.
You agree with that?
Yes, just the one point what you were asking about how Canada compared with the U.S. in terms of delinquency rates. I don't have the stats on delinquencies, but to give you a sense of how our households compare with U.S. households. Here in Canada, for a typical Canadian homeowner, he already owns about 75% of his home. So the mortgage level accounts for about 25% of the actual house on average. In the United States, what you're having is that the debt is actually bigger than the equity. So the equity is only about 45% in the United States, and the rest is debt. So it's a totally different environment here in Canada.